Good day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for Thursday, and we are now at the 14th of March, 2019, and we're about 3:40 p.m. or so Central Daylight Time. As you can see, your wheat and corn were up. Actually, corn did pretty good. It came up near the highs of the day. Wheat gave up most of the gains, still closed higher though. That's impressive. And the beans down a little bit. Now, the dollar index came back for a bounce today after getting down to 96.47. Currency's a mixed bag, as you can see, not really doing one thing or the other. The Japanese yen down a bit. The monetary policy will come out of the Bank of Japan shortly. And when we see that, we're expecting not a lot of change. But the big thing in ag, of course, is do we get this deal or not with China? And the president obviously is playing hardball. When we get the deal, it'll be the right deal, but that doesn't do anything for the farmer right now. So we're still for the week up 5 3/4 in soybeans on an area chart of just closes, but you're keeping a downside bias as prices are underneath the 18-week moving average of closes. When we come to a daily chart, you can see how the market spiked to a bottom low on Tuesday, got a little bit of a lift yesterday, and following through with that lift, at least a higher highs today, even though it didn't close higher. When I look at the chart action is one of a lower low and a higher high. That is not a trend. You can re-enter the trend to the downside by either having an inside day tomorrow, means don't take out today's high, or break through today's low. Obviously, you can always reverse that in another way afterwards, but that's what it would take at this point. Let's assume the market keeps rallying instead. Well, if the market can rally, I don't see any reason to not continue saying that 909 3/4, the 18-day average of closes, which is dropping each day. I mean, it's dropping about 2 cents a day if you look at it. Is going to slip a little bit, but that'll be the area that I'd look for some resistance. If it would clear that number, then you have the 100-day average. Important, of course, is that in the Bollinger Bands, you had been under them for several days, got your bounce, and you've spun back. So from that low of 907 3/4, you've come back in the, from, what is that number? Let's just check it. Right here. That number was 887 3/4. I'm blind here. The market has come back a little bit, but nothing dramatic, about a dime from there to where you're closing. When we go to the slow stochastic study, there's a warning sign out for the bears. If we take a look at what's been going on, the market right here had a 20 reading in the slow stochastic. The day before, the market had both numbers under 20, both under 20 on Monday, not on Friday. So Monday, Tuesday, you lost that reading yesterday and you're continuing it. You're just in an oversold market. It is not losing an embedded reading. It's just a market that got oversold, and it could still work its way up towards that 18-day average of closes the way that meal did. As you can see in meal, you've got lower highs. You certainly have lower lows. The market had gotten oversold. It rallied literally, right, like classic textbook work, to the 18-day average and stalled out. That is often the zone or the number that the market tries to figure out what it wants to do something from. Right now you have divergence on this chart. You've got the trend down. You have momentum as measured by slow stochastics trying to climb higher, and because you're under the 18-day average of closes, the bias is down. Now in the soybean oil, today was what we call a failure for the bulls. The market was trying to get itself, if you take a look here, you had how many days? Monday, both numbers under 20, under 20, under 20. So now what the market did is yesterday, which is Tuesday, the market loses the embedded reading, and it keeps it lost today. Do you see that? This is Wednesday. Today it comes back under the 20 reading. If the market's going to make a run to the 18-day average of closes, what it cannot do is, I think, take out this 29.47. Sure, it can get there, it can hit the support, but it'll ruin the play that when you lose an embedded reading, you make a move to the 18-day average of closes. So we'll see if this market rescues itself or if it fails on one of those trades that just didn't work when the market was losing that momentum. It is not re-embedded. Now it has to go through the whole process of a minimum of several days under that in order to embed. In the corn market, if we come right through here, you look at both numbers. I'm really caught on these right now because this is giving you the momentum and giving you an idea where you're at. Both numbers under 20, and under 20 on Monday. So you know you have the embedded reading. Today the market loses that. So when the market loses it, as I thought would happen in soybean oil, or the probability of it at least, the odds still favor price and the 18-day average hitting each other. Again, just like in oil, what you don't want to do is take out the most recent low if that's going to occur. Is there a big edge here trying to come into the market for 3 cents? I'll leave that up to you. But that's what I'm expecting out of the market. The wheat went right up, knocked on the door of that 18-day average, and that's where I think pros were coming out, just against that number. You lost the embedded reading. You can go there again, but you're right against it, and that's where I think the market ran out of momentum. In the sugar market, you're also losing the embedded reading. You lost it for the first time today. It can regain it tomorrow. All it did, my friends, when it lost it today, is get up to the 18-day average and completely stall out. That is why I so often tell you that line in the sand is what you look at. The bias of the market hasn't changed even with this rally. You've been under this 18-day average, that's it. And you've already met the goal of losing the embedded reading. Should the market re-embed tomorrow, this would become what we call a bull trap, and then I'd be looking for new lows in the market. Tomorrow's an important day there. In the coffee market, the one challenge of the lower Bollinger Band proved to be on the money. Yes, you hit it again yesterday, but with a higher low, and now you're back to the 18-day average with no trend. The market had a pattern of lower highs, lower lows, but it hit that objective, bounced away. It's correcting an oversold condition on the rally, and now that both numbers are not under 30, the market's no longer oversold. In the cocoa market, yesterday we were talking that if this market could rally, we were looking for this area right here, the 18 to the 100-day average of closes, to offer a lot of resistance because it already had the pattern of higher lows, higher highs, but bias down because you're under the 18-day average on a close. Today you went up, tried to get into that zone, fell right back. So what do we have here? We still have a market fighting for what it wants to be. It's not trending just yet. In the cotton market, no surprise that the first challenge area of the upper Bollinger Band right here got one day that went a little higher and you gave that all up. Plus you were overbought. Now you're in the correction mode. The trend is up. The market with this pointing down right now is still in overbought territory. Any number over 70 is overbought. So I wish I could tell you that I know that the pros are going to try to step in there. I still would expect they do, but you got to lose that overbought reading. In the cattle market, this is just back and forth between the Bollinger Bands, and it's a nightmare trade. Higher high, lower low. In the feeder cattle, you've got in this pattern higher highs, higher lows, unable to stay over the 18-day average of closes. Yesterday, if you take a look at the market, you finished down pretty good. Today you went back to challenge that zone, and that's all that I could say. What could turn the market friendly tomorrow is getting over the highs of Wednesday of 147.30. It would keep the pattern of higher lows and higher highs going over the 18-day average of closes. What's lagging is momentum, which isn't playing the game with it. In the hogs, you now have 4 days in a row over the upper Bollinger Band. I give the market a 1% chance tomorrow of staying over it, but the reason for this I've tried my best to explain. First of all, you've got a situation between China, Vietnam, other Asian countries, the African swine fever. It's very serious. And the U.S. is standing in line with exports. We hope back to them, maybe to Mexico if we can get a deal done. I mean, we're just waiting. Our pork has been a real problem for us in that we're not exporting it. But you broke out, and this is a pretty important breakout to the upside of the market. Now you could embed. Both numbers today are over 80. They were over 80 yesterday, over 80. Literally right on the 80, so we'll give it the benefit of the doubt that it's embedded. To get an idea that the market's about to get a correction, watch the red line. If it turns and gets under 80 on a close, the odds favor the market's going to try to come down at first, probably the 100-day average, maybe even the 18. Buying over 4 days in a row over upper Bollinger Band, not the most courageous thing I would be recommending to people. It doesn't matter, you know, a trend's a trend. If you watch this, you probably like technical indicators. And you know, we've got these two, if you will, technical indicator brochures that our good friends at Futures Magazine put together. I resurrected them years ago for them, and we gave them a fresh look, brought it up to date. They're PDFs. You can print them out. They're in full color. They explain all these different parts. This is part and parcel also if you want to get our futures trading kit with the different charting software and everything else in it. Simply give us a call. Go to our website. You'll see our carousel of free offers. Give it a click. Take a look there. You can click up here at any time as well. It'll take you where you need. I'm Ira Epstein. You have yourself a good day, and I'll talk to you tomorrow.